welcome to another episode of Straight from the Fund Manager. Joining us today is Vivek Sharma, Fund Manager of Nippon India Income Fund. Hi, Vivek. Thanks for joining in. Vivek, to begin with, under what category of the fund does Nippon India Income Fund fall?
Okay, so Nippon India Income Fund is part of medium to long term category as defined by the regulator SEBI. Under this category, a fund can have duration restrictions on the lower side of 4 years, on the higher side, it's 7 years. But within that band, there is no restriction on the kind of asset you invest in or any rating profile which is restricted.
What objective, Vivek, of the investor does this fund try to fulfill?
So since it's a medium to long-term investment fund, this can be used by investors to meet their long-term needs of money, which could be, funding a child's education, buying a home, or maybe, retirement planning, need regular expenses. And it comes with a larger degree of visibility and a safer revenue of investment.
Right. Vivek, can you share with us what the portfolio of the Nippon India Income Fund looks like?
Yeah. So since this fund invests typically on the longer maturity bonds, we have restricted ourselves to invest in largely high grade issuers in this portfolio. Currently, portfolio has around 90% exposure to sovereign government bonds, and remaining 10% is invested in high grade AAA assets. Fund is running a duration of between 6.5 to 7 years, reflecting our positive and constructive view on interest rates going forward.
And what is the recommended time horizon for investing in this fund?
Like I said, since the bond fund is for a longer maturity, investors should look at investing at least for a period of 2 to 4 years in this product, because since there is a duration element in the underlying securities, there could be intermittent volatility and there could be mark to market impact on the fund. So investors should match their investment horizon with the duration profile of the fund, which would be typically 2 to 4 years.
Vivek, I want to get your view on the rate cycle. What is your view on interest rates right now? From the look of it, the US is not going to be moving with the rate cut anytime soon, up until September at the earliest, from what we've heard. What does this mean for our interest rates and the RBI?
Uh, Rightly, you said there has been a mixed set of data coming in from US for last couple of months. Though it's in line with the expectations, but it is coming in with a bit stickiness in terms of inflation or slowdown in the labor markets. So on back of that, the rate cut expectations have got delayed from June towards September or October. I think in this backdrop, RBI would not be comfortable cutting rates because currently in domestic markets, the primary concern of RBI is emanating on the currency front. On the macro front, domestically, we are very comfortable, be it inflation or GDP growth or current account deficit or fiscal deficit. So, but to protect currency, RBI cannot cut unless USD rates come down. And hence, we expect, RBI would wait and cut possibly once US Fed has started cutting rates.
Right. Thank you very much, Vivek, for telling us everything we need to know about the Nippon India Income Fund and also your view on the rate cycle going ahead.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.